Michael Burry, renowned hedge fund manager famed for inspiring The Big Short, has once again made waves in the financial world with a bold move against the tide. In a strategic maneuver, Burry's Scion Asset Management recently disclosed holdings that include over $47 million in bets against the iShares Semiconductor ETF, SOXX, managed by BlackRock. This decision comes at a time when semiconductor manufacturers have been pivotal in propelling U.S. equity gains throughout 2023. Market reactions, an in-depth analysis of Michael Burry's contrarian play. Michael Burry, the enigmatic figure whose foresight was immortalized in The Big Short, has once again thrown down the gauntlet in the world of finance. His recent move to bet against the iShares Semiconductor ETF, SOXX, managed by BlackRock, has triggered a flurry of discussions and speculations within the financial community. Given Burry's track record of making prescient calls, notably foreseeing the subprime mortgage crisis in the mid-2000s, any move by him is closely scrutinized. The market reactions to his significant bets against the semiconductor sector, a key driver of the recent equity rally, are both varied and intense. Some analysts argue that Burry's decision reflects a keen sense of market dynamics, highlighting potential vulnerabilities in the seemingly invincible semiconductor industry. The soaring valuations of major players like Nvidia, which has seen a staggering 246.9% surge in 2023, might be ringing alarm bells for Burry. Investors, therefore, are contemplating whether this move is a warning signal of an impending correction in the tech sector. Conversely, skeptics question the wisdom of betting against a sector that has been at the forefront of technological innovation and market resilience. The semiconductor industry's role in shaping the modern tech landscape is undeniable, and some investors view Burry's move as a bold but possibly misguided contrarian play. One thing is certain, Burry's influence is not to be underestimated. His past predictions have not only proven accurate but have also sparked broader market trends. As news of his bets against SOXX circulates, it has prompted other investors to reassess their portfolios and consider the potential risks associated with an industry that has, until now, been a stronghold of market growth. The options market, where Burry's puts on SOXX were executed, has seen increased activity and speculation. Traders are closely monitoring any signs of a shift in sentiment, trying to gauge whether Burry's move will catalyze a broader trend of repositioning within the market. The implications of this contrarian play are not confined to the semiconductor sector, it resonates across various tech-related industries and beyond. Burry's decision to consolidate Scion Asset Management's portfolio, coupled with the closure of significant bets against popular U.S. equity benchmarks in Q2, adds another layer to the narrative. It suggests a strategic shift that extends beyond a singular sector. The broader market seems to be absorbing this information, with investors pondering whether it's indicative of a changing landscape or merely a tactical move by one of the most influential investors of our time. Discussion on strategic value, navigating the ripples of Burry's contrarian move. Michael Burry's recent foray into betting against the iShares Semiconductor ETF, SOXX, is not just a headline for financial news but a strategic cue that other investors are taking note of with a mix of curiosity and caution. Burry's legacy, marked by successful contrarian bets, most notably predicting the 2008 financial crisis, lends significant weight to his current stance on semiconductor stocks. For investors, this isn't just about a single move in a specific sector, it's a signal to pause and reconsider their own investment strategies. The semiconductor industry, which has been a powerhouse in recent market gains, is now under scrutiny by one of the most influential figures in finance. The strategic value for other investors lies in the lessons learned from Burry's past successes. First and foremost, this move prompts a reassessment of portfolios, particularly for those heavily weighted towards the tech sector. The soaring valuations of companies like Nvidia, AMD, and Broadcom have been integral to recent market growth. Burry's contrarian play suggests a potential correction or, at the very least, a re-evaluation of the exuberance surrounding these tech giants. Diversification emerges as a key consideration in the wake of Burry's move. Investors may reconsider the concentration of their assets in specific sectors, realizing the importance of spreading risk across different industries. The semiconductor sector's volatility, as highlighted by Burry's bet, underscores the importance of a well-diversified portfolio that can weather potential storms in individual sectors. Risk mitigation becomes a focal point for investors looking to navigate the uncertain terrain that Burry's move hints at. Whether driven by concerns over inflated valuations or broader economic indicators, the cautionary note sounded by this contrarian move encourages investors to assess their risk tolerance and adjust their positions accordingly. Furthermore, this isn't just about semiconductor stocks, it's about the broader implications of a market influenced by one of its most impactful players. Burry's decision to consolidate Scion Asset Management's portfolio and close bets against popular U.S. equity benchmarks adds an intriguing layer to the strategic landscape. Investors may find value in understanding the broader market trends that could be in play, contemplating whether this is a singular event or part of a more significant market evolution. In conclusion, Michael Burry's bet against the BlackRock Semiconductor ETF extends beyond a mere financial maneuver. It's a strategic signal for other investors. It urges a reconsideration of portfolios, a focus on diversification, and a proactive stance on risk mitigation. As the ripples of Burry's move continue to spread through the market, other investors are left with a thought-provoking puzzle. How can they position themselves strategically in the face of potential shifts signaled by one of the most iconic contrarian investors of our time?